All right, all right, all right. Okay, let's.
Okay, I think I have the mic back. Let me just put this on. Thanks, Nigel. Well, I think we have the management of Healthcare Global, which is in focus. And we have Mr. B.S. Ajay Kumar, Executive Chairman at Healthcare Global Enterprises, joining us now. Mr. Ajay Kumar, good morning. Great to have you with us here on the program, sir. It's always good to see you. I want to, for our viewers, put out three things that we want to sort of obviously discuss, apart from other things. One, of course, is this entire issue of private hospitals opposing General Insurance Council's common empanelment, citing pricing claim issues. Second, outlook for FY26, of course, and beyond that. And of course, number three is the company's strategy, on growing the oncology care, especially now with KKR as a partner with you, buying out CVC. So we'll talk about all this. Mr. Ajay Kumar, as I said, great to have you with us here. Stock's done very well, sir.
Yes.
When this KKR transaction happened from 500, gone up 30-35%. And of course, I mean, that's a smaller move. The bigger move has happened, and it's basically doubled from 2000 and, over the last 2.5-3 years or so. And many investors believe there is more to go. You are perhaps the only large pure play oncology care health provider, hospital company. So give us a sense, Mr. Ajay Kumar, of what are the since February, since this transaction took place and you got a new partner. What are they driving at? Give us a sense of what's happening. What is the guidance you want to put out? One common thing I hear from many is that margins will continue to improve, and you're still below where other players are, and that gap will close. So just give us some quantitative idea about how the thinking is evolving, sir.
I think first of all, we are very happy to have KKR, who has significant experience in healthcare, and coming from a perspective of that. And also our operational excellence is really improving significantly now. And with that happening, we are looking at, as you said, improvement in the margin. And as you said, the outlook is very good because our growth is about close to 15%. We'll sustain that. And also, what we are looking at is niche areas where we think we can create the hub and spoke model. With this, infusion centers, which we have spoken before, all of this will give us an upside as we move forward, being a single specialty. And one of the things I want to add is, when people want the first time right care in oncology, they are moving towards a single specialty because we have published outcomes which show very good, equal to global standards. And this is what we look at when we look at a cancer patient. What is the first time right treatment and what will be the outlook for the patient going through the treatment? And globally, cancer actually has shown a great improvement. And what I'm very proud to say today is we are on par with the global best centers. Like I studied in MD Anderson, we are on par with that in terms of outcome when you look at breast cancer, GI cancers, head and neck cancers, where we are very focused in research and academics. And this is what is giving us that destination. So we are truly become a destination for oncology in India and this part of the world, including Africa. And that is what is driving us.
Yeah. No, and that's the other thing I hear from investors, their acknowledgement that, there's a fair bit of R&D work, etc., with cancers that HCG and you've sort of been able to do, and you're passionate about that. Just give us that margin trajectory, sir. I was reading another note which said that about 40% of the beds are still in ramp-up phase. Could you leave us with some numbers? Where do you see margins? When will these beds become margin accretive? Overall, at a HCG level, what is the margin trajectory going to look like? What kind of improvement should we expect every year?
Like I have always said, our first target in margin is to achieve 20% and above. And I think we are on the way to achieving that, hopefully in the last quarter of this year. And we have taken really a lot of steps, particularly with a new CEO coming, Dr. Manish Mathur. I think we are all well aligned to see this improvement happens overall, particularly our centers, which were initially lagging behind, are showing a significant improvement now. And this will sustain. With this, I think our margin will reach about 20%.
And it will, you'll stay there after 20 last quarter this year, and then 20 is, you will maintain at least 20.
Yeah, that is our goal, and our internal strategy shows that we will achieve 20%.
Okay, and it will, beyond that, I mean, any thoughts?
Yeah. But if you look at our center of excellence, Bangalore, the margin is over 28 to 30%. Similarly, in a center of excellence in Ahmedabad, these are the things which we are out to achieve. Can we achieve the same goal in other centers? So for example, Cuttack has a good margin. So our goal is to see whether all of the centers can scale up to this center in Bangalore. And this is where we are headed, and we are in the right path to achieve that.
Okay, all right. Hi, Dr. Ajay Kumar. Good to see you in, sir. Commentary with regard to cancer as well, and the fight against cancer. More power to you, your entire team as well. Gives a lot of hope out there. But that said, KKR announced the acquisition of HCG in February 2025. Now, CVC, they still hold close to a 9% stake. Have they communicated what they want to do with that 9%? Is there a timeline by when they, sell that? Point number one. Point number two, you have taken some money off the table. There was a small, large trade that we saw earlier this week where you sold some stake and a renowned mutual fund bought that stake. As of last count, you had 10.8% stake in the company. Will you look to further bring it down?
No, I have no idea. I do not think so. The only reason I did that is because, where I am in the schema of things, I want to use some of the funds for my philanthropic activities, which have been a long dream for me. So I am using that for women development, leadership training, rural areas, healthcare, education, and policy in terms of disparity. So this is where I have started a policy institute. I'm going to use most of the funds to develop those institutes. As far as the CVC is concerned, I think agreement is that they will come down to 6.6 with 3% more going into KKR. That is the agreement after the open offer. We are waiting for the final numbers. Once that happens, we'll get more clarity on that. So this is where we stand. CVC will be around 6.5%, 7%. I will be around 9.88%. And of course, KKR will be around 54%. The rest will be the publicly held at this point. And I have no intention of doing any further dilution at this point.
Got it. Okay, all right. If you could tell us, there was, you've done some inorganic growth as well. Small hospital, I think, is what you had picked up. Tell us the number of beds you have. How do you see this scale up? And is there more inorganic growth you're looking at?
Yeah, we have acquired the MG hospital in Vijayawada. That has been our inorganic growth. Right now, we are in the consolidation phase. So I really do not want to comment. And once, we get the consolidation, then I'm sure our management team with Dr. Manish Mathur will go and give more clarity on that in the future.
Okay, all right. Thanks a lot, sir, for joining in and giving us all of those details. Well, wishing you all the best, and we look forward to chatting up with you soon.